traders, Greg here with Market Update. Okay, so we are finishing the week with quite a lot going on in markets at the moment. We are seeing some classic risk-off trading, some bearish trading across all markets to end the week. And yes, of course, Trump headlines and Trump tariffs are obviously part of the reason that we are seeing this. So look, what we do know obviously is that Canada and Mexico, they're 25% tariffs after that 30-day delay. Look, they are coming next week on the 4th of March. Initially, Trump had instilled 10% tariffs on additional tariffs in China. So overnight, he's actually added to that another 10%. China now has been bumped up to 20% tariffs. So look, that was certainly some new news overnight, and obviously market didn't quite like that. Look, every time we do hear about tariff policies and about tariffs, there is a flight into the US dollar, so the US dollar certainly goes bid, and we saw a lot of that overnight. So obviously, with China getting those 10% additional tariffs, dollar China, dollar CNH had a spike up. So we're back up towards that 730 level. Those critical levels above there. So suggest that probably obviously will stay bid as well. The Aussie dollar, hates any tariff talk. Anything that is not good for China. It's generally not good for the Aussie either. So, we saw one of the biggest one-day falls in the Aussie, and Aussie's back down, around that 62.5 area. Technically, the Aussie was actually performing quite well up until a few days ago. And it looked at it as if potentially the Aussie might have a bullish key reversal month for February. It just had to close today at the end of trading above 63.30 to trigger that. So good luck with that now. That certainly doesn't look like it's going to happen. So obviously no trend change for the Aussie. So we can't really step in and buy the Aussie with much confidence on that technical without that bullish key reversal month. But now moving over to Euro, yes. Trump again is looking at reciprocal tariffs, for the EU and Europe. The Euro was trying to get back above that 105 level for most of the week, and it's also been smashed back down to 104. So again, look, I suggest, this US dollar strength is, across the board strength, and certainly would not be fighting that, looking to sell the US dollar. Okay, so moving along, gold has had a very big week. This week we were making new record highs above 29.50. But in the last couple of sessions, we've seen a very big retracement of gold. It's sold off almost $100 now. So look, a few things happening there. One is that gold does trade inversely to the US dollar, so that US dollar strength is certainly weighing on gold. Look, the fact that the Russia-Ukraine war, obviously, we're very close to getting a deal done, and those headlines confirming that. Gold has been a safe haven. There has been a war premium built into gold for what's been going on there with Russia and Ukraine. So we're seeing some unwinding potentially of that safe haven status for that war. And then obviously, some profit taking obviously has come into play. Interestingly, on the weekly techs, we are actually seeing now potentially a bearish key reversal week from record highs. Gold basically just needs to close below 28.78, which was pretty much last week's low, to trigger that. And if that does happen tonight, then basically it says that potentially, at least in the short term, we have seen a significant top in gold, so we can probably forget about those 3,000 levels in the short term, and that we are potentially seeing a trend change. So I'd be a little bit cautious about going in and buying gold aggressively if we do see that bearish key reversal on gold. The other commodity market that's been the focus this week has obviously been crude. Crude has this week been trading very bearish. It dropped below $70. But last night we saw OPEC come out and say that they're reconsidering the production hikes, increasing supply that was due in April. And so that is what got crude oil rallying last night, going against every other bearish market, and was the best performing market, up 1.5% or so, back marginally above $70. I'd suggest though that crude is probably a sell on rallies, for the simple reason that ending the Russian and Ukraine war is a big deal for crude, and potentially more Russian oil supply coming on the market. So I'd imagine that this rally probably will find some good sellers. Okay, moving on to equity markets. Equity markets have been a super hard trade of late. Especially US equities. We've seen some very choppy trading. So whether you've been long or short, even in the same session. But what we are seeing finally is that the bears are winning. So overnight, we did see NASDAQ down almost 3%, saw S&P down almost 2%. The S&P now is at levels of where it was when Trump first won his election. So if you had bought on Trump winning the election in November last year, you are now even money. NASDAQ is actually going negative for the year now. So again, yes, look, the bears are winning. Look, we are at some some key levels at the moment, technically as well. So if we do see a break, we can see some more momentum selling. And on the text, what we're seeing is very interesting, is that the NASDAQ on the monthly text looks like potentially it might be printing a bearish key reversal month, and that's from record highs. So certainly that would be a very bearish technical indicator that would be coming in, and that we have seen again a significant top coming from record highs, and then I'd suggest obviously NASDAQ is a sell on rallies. Okay, to end the week, we do have some very important key economic data coming out of the US, and that is personal consumption expenditure, PCE index. It is the Fed's preferred inflation data point. So I would suggest that if the markets have any hope of recovering something tonight, you're going to need a print that comes in lower than expectations, get those bond yields lower. But if conversely we don't see that, it may also help this bearish risk off trading that we've been seeing, that's been hit the markets late this week. Good luck with your trading, and we'll catch back in with you next week.